What's up guys, and welcome to today's video. So from the thumbnail you've obviously guessed what we're going to be talking about today. It is debt, but not just localized debt like the debt I have as a person. We're going to look at all the debt in the world and just how out of control it really is. Let's get on with the video.
Christina, how bad is this? Be honest. Is this Windows Vista bad? It's not iPhone 4 bad, is it? Fuck. Don't tell me this is Zune bad.
I'm sorry, Gavin. It's Apple Maps bad.
So guys, what is debt? Debt is essentially the borrowing of money from one party to another. So party over here has £50 and they come lend it to this party over here. And what it tends to come with is a kind of a contract, which is you borrow this money and we will eventually pay it back with interest. And when we think about the global world of how much borrowing there is borrowing from household citizens. So there is household debt, then there is sovereign debt, which is countrywide. So this is including government, sovereign and kind of corporate debt all wrapped into one. And there's something I wanted to take a look at, and one kind of factor, which is GDP to debt ratio. Let's take a look. So guys, as I did this video, I did kind of a lot of research beforehand and just investigating for myself kind of how bad the situation was on debt around the world and what the total debt level was. And I was shocked with some of these statistics, and it is a bit worrying how we're going to get out of it. So let's dive right into what is, the poster boy of how bad this debt crisis is. So as we headed into 2020, the first quarter, global debt topped $258 trillion worth of debt, which is just an astronomical number. I mean, how much borrowing can any country do? But what is also worrying is this percent ratio that I talked about, which is the GDP to debt ratio. So what this is the ratio between how much kind of debt a country has compared to its annualized GDP. So if it's over 100%, that means the national debt is over how much or basically gross domestic product that country produces in an entire year. So basically the bill at the end of their meal is more than they make in an entire year, which is absolutely scary. But the worrying thing here is that total debt around the world is 330% of all total GDP. So to put that in perspective, that means that the world would have to work essentially 3 years at the nominal GDP to pay off all of its debt for free. So nobody gets paid, nothing, all the money goes off to pay off the debt for 3 whole years. That's how bad this is. And there are some absolute culprits in this, and let's take a look. So guys, let's look at the debt to GDP ratio by country in terms of 2020 and which are probably the worst off countries on this list. Because some of them aren't necessarily worst off, and I'll explain why. So Japan is leading in terms of its debt. It's currently standing at $9 trillion US, and this is essentially 234% of its GDP. So it is heavily borrowing money, or it has done in the past, and it's built up basically a lot of debt. And this is because in the early kind of 1990s, Japan was going through a real estate crisis and a financial crisis, which it then dropped its interest rates and issued essentially the government borrowed a lot of money to bail out its economy to try and get it restarted, and it has been struggling ever since on that. However, if we look down the list, you've got Greece. I still remember when Greece and the bailouts happened in the 2000s for Greece from the European Union, and Greece was in a real big trouble. So its debt isn't necessarily high, but it's incredibly high to its GDP, which its economy just really isn't geared to take. and it's almost stalled its entire economy. And if we look at kind of where Greece is as a country, its economy isn't really growing. It's very stagnant, and it's really kind of being affected by this debt. However, you've got kind of the United States on this list, and I think this is an interesting one, where the United States can borrow this amount of money. So its national debt is almost 20 trillion, which sounds like a lot, but in terms of its economy, it's such a high geared economy in terms of there is a lot of faith in the world that the US economy will make money tomorrow, and therefore it can leverage that hope from other countries in kind of leveraging that debt and using it so it can borrow, and hence why, you know, it's on this list, but it's not necessarily something to worry about. And also, the current predicament we find ourselves in all across the world right now is governments are going to be borrowing more money to keep the economies going, keep liquidity in the markets, to avoid a very, very deep recession or potential crash of the economies themselves. So if we look here, the UK estimates it's going to have to increase its borrowing to £298 billion for the financial year ending March 2021. And I mean, it's done an astronomical amount of borrowing in kind of early April this year just to keep the economy ticking over. And I think we're going to see this all across the world, is that borrowing this year, due to kind of the recent events we've had in the economy, is really going to increase that debt level even higher, which is, you know, very worrying again. And also, guys, it's not just sovereign debt. So we talked about at the start sovereign debt being kind of like countrywide debt. There's an underpinning factor in this, which is also the household debt, which has been going up over the years. So if we look here, the US household debt tops $14 trillion in February this year, reaching all new time records. And I think we have, as a society, got into the habit of, you know, quick day loans, payments, and this has been combined with the interest rate, which I'll touch on in a bit. There's also a lot of borrowing going on in the UK, so that's increased. And there's some very scary statistics out here. I mean, I'll flash them up now, but I mean, to me, this was absolutely horrifying to hear. The poorest 10% of households have debt 3 times bigger than the value of all the assets they own. And it's just ridiculous. And I mean, the disparity between the poorest in our countries and the richest is, you know, a topic for another day. But that's growing because we live in a society where prices are hiking up and up and up. And because interest rates are so low, the borrowing to get these assets, and kind of we live on a consumer kind of culture where we are force-fed products from everywhere to kind of consume and use. Having such a low interest rate makes them seem achievable, but you are piling on debt, and there is a debt threshold that I'll talk about in a second as well. But I mean, the top 10% of kind of wealth have assets 35 times larger than their debt. So they have 35 times their debt, whereas the poorest have 3 times as much debt as all the assets. And that was a really scary fact to find out, and not something I enjoyed reading. Right, guys, just to recap, the two things are the massive increase in household debt over the years, and then the massive increase in sovereign debt. This is due to the kind of the increased borrowing after we had the 2008 financial crisis to keep the economies going and restart the economies. And I'll touch on now why. So why do I think this massive increase in borrowing has happened, and also, is it bad? I think that's really the question, is how bad is all this debt, or is it just something we're going to have to live with? Let's find out. So guys, there are 2 reasons why the total debt level is so high, and why I believe, you know, it's got there. I think number 1 is the interest rate. So going into the 2007-2008 financial crisis, we had an interest rate in the UK of 0.75%. You know, it's better than some stocks. A lot of people are leaving their money in the banks. Afterwards, it crashed all the way down to 0.5, and it's been hovering around 0.5 to 0.25 ever since, to pretty much now. The interest rate is so low that borrowing money is coming with no strings attached. So it's very much easier for countries, essentially, households, businesses, to borrow debt and pay it back later, because it is easier to beat what is essentially the kind of the formula of borrowing money and transforming it into value later on. You don't have that 5% penalty. You don't have to beat the continual interest if you're an organization. It's become so cheap to borrow money. That's why we've seen such a dramatic rise in debt, essentially the borrowing of money. And just to put that into comparison, I've just been looking at like the history of interest rates. It's so depressing. So in 1979, the bank average percentage in the UK was 17%. Oh my days. Would I have liked to have left my money in the bank then? So, and then the other second point is really the kind of bloom of the global economy we've been having in recent years. So if we look prior to the current situation we're in, we have been on a 10-year winning streak. If you look at the US stock market, it's been on a bull rush for essentially the last 10 years. And economies around the world have been flourishing during this time. And as the global economies are flourishing, people are more happy to take on debt because the risk appetite is essentially higher, because even though the debt levels increase in certain countries, because the economy is so good, there's less worry of it actually turning into toxic debt, essentially. So guys, is debt dangerous? I think this is really the question that everyone's answered. Of course it's dangerous. It's exceedingly dangerous. It's owing lots and lots of money, trillions and trillions of dollars. But it depends where that kind of debt is in the kind of global economy. If we read this kind of little paragraph here, I think it really explains it. So, is debt to GDP ratio a good predictor of which countries will default? Not always. Japan's debt to GDP ratio is at 220%. However, Japan is not in the danger of default because the citizens, so the household debt, holds the debt, not the government, not the banks. It's the citizens. So the leverage of debt is people will get poorer, but the country itself won't default. However, when we look at Greece, basically the governments and banks held a lot of Greece's debt, and therefore Greece's economy essentially imploded on itself, where it only had the option to increase taxes, reduce spending, which basically grinded its economy to basically a standstill, and its ability to basically pay off the debt was crushed because its economy couldn't flourish. So guys, the final point I want to touch on is why do governments and why do countries around the world borrow money in the first place? So if we think of large, massive infrastructure and economy driving projects, they require billions and billions. I need to insert that Donald Trump clip right here.
Billions and 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 billions and
billions and billions and billions of dollars to kickstart the economy and essentially flourish. But by doing that, you are indebting the current generation. You are saying, right now, as a citizen of this country, I'm going to borrow, 5 times your average salary for, the next 10 years to put into the economy. But what the governments are hoping for is that drive and that money and the use of that money in the economy will create more jobs and pay off later down the line to pay off the debt it is getting now. And because interest rates are so low, that's why there's just so much borrowing right now. And, you know, to not stall your engine, you need to do this effectively. And I think that's what governments all around the world right now are trying to do, is they are trying to, you know, leverage more money, so borrow more money right now to make sure that the economies don't halt and keep liquidity in it and provide what is, you know, new jobs to keep the economy going. So guys, I hope you've learned something in this video, and I hope you have found it interesting. I really enjoy doing this for you guys. I actually find it really interesting to do this research myself and just show you what I've found. And there's a silver lining in it for me. So I currently have a mortgage, and as interest rates are super low, the mortgage rate is at an all-time lowest rate, which is good, and it is one of the silver linings. But I think, you know, nobody can escape the fact that the debt level is very worrying. It is astronomically high, and as that percentage of GDP to debt ratio increases, it's screaming for people leveraging far above their own countries. And I think this is something everybody should watch in terms of the next recession coming, is how far can this percentage go up? Because 300 is astronomical already, but how much further could it go? Anyway guys, if you've enjoyed this video, please give it a like, comment down below on your thoughts, what you think, anything you've learned, and I'll see you in the next one. Laters.